Time now for business news with Nona Peltier. Nona, another incredibly interesting day on the markets today, and aviation and travel stocks are the ones that really bore the brunt of it, weren't they?
Oh, definitely. So yesterday, some of our listeners may recall that Auckland Airport put itself in a trading halt while it updated its numbers, as well. Tourism Holdings also provided a warning that they were going to be upgrading their numbers again today. So what happened was this morning, Auckland Airport said, look, they're going to downgrade their full year profit guidance by about $50 million. And that was because in the first 10 days of this month, passenger numbers dropped 18%. That's not the end of it. They expect those numbers to deepen. And of course, we heard earlier about potential more closures of border at the border, which of course implies fewer planes flying here. So yeah, I had a chat with Adrian Littlewood, who's the chief executive of Auckland Airport. He said there's no way of really knowing, but for certain it's going to be this way at least until the full financial year happens. That's reported in August, roundabout, because the year ends in June. Tourism Holdings, we also heard from them. They basically abandoned the idea of providing a guidance. They said, we just don't know.
So much the same as Air New Zealand said.
Very much the same.
Can't even work it out, so won't even bother.
No, can't even bother. So what happened there was Auckland Airport, it fell 7.8%. Now, these numbers improved, believe it or not, through the day. Tourism Holdings down 16.7%, and Air New Zealand's shares 12.5% down. Big numbers. And of course, our market really it was quite shocking to see it fall about 8% or so early this morning. Gulp. And then, of course, the Australian market opened, and it wasn't so bad. So it opened, it looked quite a lot better than the New Zealand one, and that's not typical. So what happened was, I guess people in this market thought maybe they'd oversold. So improved a little bit. And just before I came to talk to you, the Australian market was, down about 1%. And at one point earlier, it was down, I guess, about 8%. So that's a big recovery in a day.
Yeah, it's rebounded.
When we talk about volatility, I mean, that is massive volatility. When you go from being down 8% to being down just 1%, those are massive numbers. And this is the ASX 200 index. So, yeah. Obviously, Asia is also looking pretty sick. The Nikkei was that's the Japanese index. It was down like about 10%, in line with what we saw on Wall Street. But what was really unusual about what's been happening is it seems like all asset classes are being sold down, and it's not just normally when you have a market like this, there's safe havens. There doesn't appear to be any safe havens at the moment. So, and it's partly because people are looking to cash out. They want money. And
even gold took a hit at one point.
Everything did. I mean, there wasn't anything that was saved. Bonds, gold, these are usually considered to be safe things. No. But strangely, well, I don't know if it's strangely, who can say which way this market is moving. People who've been watching the market for decades are also scratching their heads somewhat. What it does point to, though, is that people are looking to cash out, completely cash out, because they need money. So that saw the U.S. Federal Reserve, put some money into the system, short-term money. Like we're talking about like over $1 trillion. A trillion. That's a lot of zeros, And then they looked to Europe to see what the European Central Bank would. They thought that they would cut interest rates. They didn't. In fact, they said some sort of, well, the president said some disparaging things about the market, like we're not here to serve the market. That did not help the sentiment, believe me. And we've seen that this week. There's a lot of disappointment in the way that the governments are not coordinating their response to this crisis. And so calm heads, there's not a lot of those.
And the numbers, how did they wash out at the final bell?
Well, as we heard earlier in our headlines, we were down 4.9%, so that's a big improvement from the 8% drop, never before seen in the history of our markets. That was a drop of 506 points to 9,827. Now, I know that sounds like, oh my gosh, but really, that was levels we saw in June 2019. So look, we're down, but we were way up. So I think, overall, people should not be panicking at this stage. The New Zealand dollar, 61.3 US cents. Now, interestingly, almost all currencies took a hit as people were trying to chase after those US dollars. At one point, we were down to 60.8 US cents. It was like, ooh, that's pretty low. But no, we picked up there. 97.4 against the Australian. That's because the Australian dollar is having a worse time than we are. And 48.8 British pence, which is just steady where we were really yesterday. And that's it.
Thanks, Nona. Nona Pelletier with our business news there.